All right, today we're talking about building a portfolio for you and then taking some of it and trying to make some income out of it. So we're gonna get started here. Hope you enjoy. All right, so if you have a IRA and you haven't looked at it, then chances are you have some grouping like this. You have some index funds or mutual funds. You're gonna have some kind of bonds in there. Maybe they're bond mutual funds or bond funds. And then you might have some others. Now, the others are getting left out these days. Usually, money doesn't flow so fast into index funds. Right now, it's a bit of a bubble. I'll say it, it's a bit of a bubble. Most people are funneling their money into index funds because that's where the performance is at. The market's up over 11% this year. If you have index funds, you're looking at about an 11% gain minus whatever fees there are. So everybody sees this, it gets attention on TV, and money follows that attention. That's how it all works. Have you heard of FANG stocks, right? You've seen that in the news, I know you have. And those stocks went crazy because everybody wants to be a part of this attention. So the others kind of get left out, but you have some mix of index funds, bonds, and I don't know, emerging markets, gold, oil, whatever that might be. Here's what we're talking about doing today. If you are in the growth phase, okay, then a lot of your portfolio is gonna be here in the index fund space. If you are getting close to retirement, then you're seeing more obviously in the bond space. We all kind of understand how that works. There's no need to go into that. But here's how we break down a normal portfolio. We're gonna have index fund here and maybe a couple others that are related. You're gonna have some portion of bonds, probably less if you're 10 years plus to retired, and then you're gonna have very little of the others, if any, okay? And that's just how the markets or the financial advisors build portfolios. Agree or disagree, that's what you're gonna get if you go to some automated service or you just go to a big company and they just kind of pick the investments for you. What I'm saying is we can add to this, okay? We can say, let's pretend that this is all real estate. I know you've heard me say this before. If you haven't, go to our website, lots of great videos on this, or just scroll through on the YouTube channel that we have. But what I'm saying is the markets are up incredibly here. How can we continue to participate in these gains but start to reduce our risk? And what we're gonna do is actually just go through and pick a few of these products. I've done a few videos on this. We're gonna pick a few products and start letting other people rent them from us, okay? Now, depending on how aggressive you wanna be, we may pick quite a few of these and rent these out, okay? What are we talking about? What does that even mean? Well, in real estate, if you were to build a portfolio of homes, some single family, some multifamily, and maybe a piece of commercial property or something, what do you do with it? You buy the single family homes and you rent them out. You would never just buy a home that you're not going to live in and then just hope that it goes up, right? You want to generate income. Well, we could do the exact same thing with your retirement investments, okay? Now, what this does is by renting out these positions, it's starting to reduce your risk. And I say that very aggressively, okay? Reducing your risk, because this has a cost. Let's say you paid $100 a share. This has a cost. Let's say it costs you $50 a share. All of this costs you something, okay? And the value of that's going up. Now, lately you've seen it go crazy and have a great time, but what we want to do is start reducing the cost of that. So if we can get somebody over here to pay you $1 a month to rent this position, if we can get someone over here to pay you $250 a month to rent this position, what happens? Well, that thing that you paid $100 for is now dropping by $2.50. Do that long enough, you could essentially own this for free, not have a cost basis, and it'd be very similar to buying a house for $100,000, getting someone to pay you $1,000 a month to rent it, and then just keeping that going over and over again. So this is the analogy I use just to make a really complicated process simple. If you really, really want to geek out on this and look it up, it's called selling covered calls. We use a variation of that to do this for our clients. It's not suitable for everybody. If you're just getting started, you've got $5,000, $10,000, there's a better way for you to go. You're actually hoping the markets fall. But if you've built up your retirement accounts and now you're close to retirement, or you've got 5 years, 10 years to go until you retire and you want to start protecting some of this or reducing the cost, then that's what we can do for you. Just go to jazzwealth.com, and up at the top you can click schedule a call. I will follow up with you personally. Just put a time in there that works for you, that your local time that you'd like to speak to me, and I hope to talk to you soon.